Hi, I'm Nolan Peterson, CEO of Atlas Salt. We're developing the Great Atlantic Salt Project on the west coast of Newfoundland, which will be North America's first new salt mine built in nearly 3 decades. This is sodium chloride salt, so this is the salt that we sprinkle onto our roads in North America, the northeast of the US, the Midwest, Ontario, Quebec, and the Atlantic provinces. It's selling into a market where the strong commodity, very little price volatility. You're selling to governments, cities, and municipalities. So there's a real benefit here that this is a recession-proof industry and primarily is easily absorbed into the market, which we'll talk about in a second. So now, I mentioned that North America has not built a new salt mine in nearly 3 decades, and that usually brings up the first questions, like why is that the case if salt is such a good investment? Well, as with any resource project, you need a number of key elements that have to come together to make it make sense. And for us, we have all those elements. So the first thing with any resource project is you want to start with a world-class resource, which we have. We have a shallow, high-grade, homogeneous, and thick resource. The shallowness is the key here. This is what makes it all possible as a mine. So existing mines in North America, again, who are all over 25 to 30 years old, have been operating for many decades, and they sit at great depth, 500 to 600 meters minimum for the most part. That necessitates development through a shaft mine, so a vertical shaft into the ground. That's far more costly to develop, takes longer to develop, and it's higher in operating costs as well. The alternative is our option, which is a drift mine. Because we're so shallow, we can access it via a drift, which is more of a horizontal, angular structure down into the ground. This lowers the capital cost, lowers the development time, and lowers the operating costs as well. So, what else do you need? You need a good jurisdiction. As I mentioned, we're on the west coast of Newfoundland, which is one of the best mining jurisdictions in the world, let alone in Canada. And then the other key advantage that we have that really makes this possible is the infrastructure. I'm going to jump ahead here. When you're selling a bulk commodity product like salt, this is an industrial mineral which is low margin and high tonnage. So you have to be close to your customers or close to an ability to get to your customers. And that's what we have. We are less than 3 kilometers away from an existing deepwater port called Turf Point, which is open year-round and currently moves product and can move in the future 50,000-ton Panamax vessels. These vessels will allow us to target all of our key markets, again in the northeast US and eastern Canada and up and down the St. Lawrence Seaway. We intend to connect this port to our mine site here, outlined in red, via a 3-kilometer long conveyor. And then we're about a 2-kilometer long conveyor to our mine levels, which makes this entire conveyor run 5 kilometers. So this is a very, very efficient, logistically efficient operation. Now, also while we're on this slide, I'll point out that we're less than 2 kilometers away from a tie-in to St. George's substation, which is an infrastructure tie-in to Newfoundland Hydro, and we're less than 10 kilometers away from the Trans-Canada Highway. We're also less than a minute away from a town of about 600 people called St. George's, and then to the northeast is another town called Stephenville that's about 20 minutes away that has about 10,000 people. Everybody in this region wants this mine built. We have full community support, full Indigenous support, and full approvals as well, which we'll talk about. So we have all the key infrastructure that's required to develop a mine. Many mining projects would kill to have power connection, road connection, port connection, etc., etc. Also, while we're on this slide, I want to highlight that because we're tied into Newfoundland Hydro, this site will be 100% battery electric operated when it's in operation. This is not an aspirational goal. This is built into our plans right now. We'll have 0 greenhouse gas emissions, making this a truly cutting-edge mine development. Basically, the greenhouse gas emissions of 4 Newfoundland households per year, and we do have a study that has confirmed that. So let's talk about the studies. When you have a deposit like this, what's the next step? Well, you have to demonstrate economic viability, and we've done that with not 1, but 2 feasibility studies. One feasibility study was prepared in 2023 by SLR, and an updated study was put out at the start of Q4 or the end of Q3 in 2025, also prepared by SLR. That updated feasibility study is completed, and it demonstrated significant economic impact. So we had an after-tax NPV of over $900 million, an internal rate of return of 21.3%. I want to point out that those are very strong for an industrial mineral like salt. We have over 1 billion tons of salt in the ground, so it's a significant quantity, and that makes sense. Now, with an industrial product like salt, more than just the economics, what's also important is the cash flows. And we have very strong cash flows on this project. We have a life of mine average annual free cash flow of $188 million. The life of mine in the updated feasibility study is about 25 years. This is a steady state cash flow as well. This isn't volatile. This isn't spiky in the first few years. This isn't the long tail. This is every single year steady demand. That's the nature of salt deposits. They're very robust, very stable, and they just make money constantly and consistently. We also have, on top of that, 50 years potentially of salt in resource on top of what's already in the reserve. So all of this has been confirmed and demonstrated by drilling, which means that, there's no uncertainty about exploration. We don't have to drill anymore. We don't have to raise any more money to drill. And we also don't have to do any metallurgical studies or anything of that nature to prove that this deposit is viable. Everything has been demonstrated. So the next step you're probably thinking is, okay, they've got a feasibility study. They must be mired in permitting challenges or something like that. Absolutely not the case on this project as well. In 2024, just a year ago, we had an approved environmental assessment. So this project has full approval to proceed into development from the Newfoundland government, which is all we need. We have early works permits in hand. Again, we have full community and Indigenous support, and all local stakeholders are supported. We breeze through the community relations and community consultations process as a part of that EA. So this is a shovel-ready project that is ready to rock and roll, and we are ready to get started on it. So that's the high level. Now I'll get into the details. A lot of people ask about the salt market, salt industry. They're inexperienced with it. Well, let's talk about it for a second. So salt is a global industry. It's used all over the planet. Every country on earth needs salt for many different applications. Every country on earth produces salt to varying quantities as well. But what is the challenge, as I mentioned earlier, is moving that salt around. So what you find is that there's a lot of regional markets, more so than one global integrated market. Because if a local mine, for example, that's landlocked can really, in North America, only service an area about 150 kilometers around it reasonably before it becomes cost prohibitive. And so that's one thing about the market. Also want to point out that there are many other applications for salt, including chemical processing, water treatment, oil and gas, etc. De-icing is a small component of that. But for us, putting together a feasibility study, we chose the most conservative product in the most conservative market, which is de-icing salt. So we don't want to get into a discussion about other areas where our salt could potentially land, because it's too early to have those discussions. Claiming higher margins from other areas might open us up to questions that are not answerable at this time. But de-icing salt is one market, one study, one group of studies that we can confirm. So let's talk about the North American de-icing salt market. Probably one of the largest markets in the world, much bigger than Europe, for de-icing salt. Again, this is a road safety issue. This is an issue for municipalities. Citizens do not accept it when the roads are not salted. Depending on where you live, you may not understand that, but that's the reality of the situation. What we know is that North America consumes about 30 to 36 million tons of de-icing salt alone per year. And as you can see from this average price of rock salt, this is the salt that's used in many other different industries and across North America, not just specifically in our market, but you can see that the trend is salt goes up in volumes and in consumption year over year, and this has been the case for 30 plus years. Now, what people don't fully understand or are shocked to understand is that we import a lot of salt into North America, and I'm talking about Canada and the US primarily. We import about 30 to 40% of our salt needs primarily from Chile and Egypt, and that includes into the de-icing sector as well. Now, what this creates is a situation where local producers, many of them, as I mentioned, are older, built in a different generation, have environmental concerns and impacts, union contracts that drive up their costs. They're operating at the high end of the cost curve, but they have that shipping and transportation advantage that I mentioned earlier. Countries like sources like Chile and Egypt have low cost of production salt, but they have a barrier to shipping. They're always going to have that barrier. You can't lower that shipping cost because it's something that is independent of lower cost labor or something like that, that typically leads to lower cost foreign production. So you end up with an equilibrium where foreign production is competitive with local production or vice versa. Now, what we have bring to the table is our strategic location with lowered shipping times. And again, because we're in Newfoundland and we're battery electric and we're a shallow deposit, we will operate at the lowest quintile of the cost curve, not only in North America, but also competitive with foreign production. And we blow them out of the water on shipping costs. We are 1/5 of the shipping time minimum. We can take 3 days to ship a shipment to Boston, for example, whereas Egypt and Chile can take 2 to 3 weeks on some occasion. So our advantage is to displace foreign imports of salt and also be competitive with local production as well. I'd like to draw your attention to a few key events in the macro space for the North American salt market that people also aren't aware of. In 2001, the last new salt mine to open in North America was built by American Rock Salt in New York. This is in Rochester and Buffalo. This is the largest salt mine in the United States. It makes over 3 million tons a year for de-icing salt. In 2021, North America's first ever salt mine closed. This was Cargill's Avery Island salt mine in Louisiana. Cargill, of course, is one of the world's largest private companies. They are big in the North American salt sector. This mine is an example of some of the environmental challenges that many mines in North America face because it sat under a lake. And one of the reasons it's shut down is because they drained that lake into their mine, and it created and actually caused a number of fatalities. So this is the challenge going forward as some of these mines approach the end of their life and they are not as profitable and they have environmental liabilities. Now in 2024, Cargill put 2 of their remaining operations, one in New York and one in Cleveland, both of these sitting under lakes, up for sale. They've been unable to sell them so far, largely because of the environmental liabilities and the operational challenges there. Now, one other key thing that most people are a little bit don't understand is that in 2020, a process started, which I believe closed in 2022, for a private equity group called Stone Canyon, acquired German-based K&S North American salt assets. They consolidated a large portion of the North American salt industry into their hands, and they paid $3.2 billion for those assets. That represents a 13x EBITDA multiple for those assets. So for those who invest in the gold or silver sector or other type of resource sectors, you might be lucky to get 6 or 7x EBITDA. 13x EBITDA is a tremendous number. Now, the reason for that, people ask, of course, is why is it so high? Well, when you're talking about an industry with a long, steady state demand, recession-proof, selling to governments, that's why these types of multiples persist. Our updated feasibility study EBITDA, or pre-tax operating cash flow, is projected to be over $300 million Canadian per year, life of mine, $300 million Canadian. So I'll let you do the math on what 13x EBITDA is when your EBITDA is $300 million plus a year. In Newfoundland, we'll talk about the jurisdiction briefly. Newfoundland is a great mining jurisdiction. There's a lot of projects that are developing, primarily in the gold sector, of course, as is very common in Canada. But we like salt. There are industrial minerals in Newfoundland under operations, including Voisey's Bay and Labrador iron ore. So very, very strong history in the province. I want to show some key improvements that we demonstrated from the updated feasibility study from the existing to the updated feasibility study. So we shortened the mine life. Again, all that did was accelerate the cash flows, because when you have material in resource, you have the ability to add and replenish that reserve fairly quickly. So the mine life is shorter, but the cash flows are improved 60%. And again, with the understanding that you really don't lose, or you're not expected to lose all of that mine life. We lowered our average price of per ton of production and of selling price because we sold it sooner. And we have increased our NPV by 66%. And the CapEx only increased by 22%. We incorporated feedback from the EA process, and we de-risked the mine design with optimized production and engineering work that we had learned in the interim period. This mine is also modeled off of an existing mine in Ireland called the Kilroot mine, which follows the same similar process, which is room and pillar construction underground, leading to a conveyor that takes it to a port and for shipment out. So a lot of the design elements that were in this mine are included into ours, and a lot of the engineers who have worked on that mine are now working on our mine design as well. These are the numbers here. So the pre-tax cash flow, or EBITDA, as I mentioned, 325 million. Life of mine average annual post-tax 188 million. And then we have a pre-production capex of about 600 million Canadian. So that is Canadian. We are working through the process of financing the mine right now, including working with a debt lender out of London called Endeavour Financial, which specializes in resource sector financing packages. We're putting that together at the moment. They have indicated that they believe we can get up to 60% senior secured lending for our project. This is the type of lending that's traditionally not available to resource sector companies because their cash flows are too volatile or short-lived. We're talking about sovereign wealth funds, major infrastructure banks, export development credit agencies. Yeah, they're looking at it as investing into a hospital or an airport or a subway. The demand is always going to be there, and the return is going to be very stable as well. We also have the opportunity to increase the subordinate debt levels on the project once we've secured our senior secured lending, because the cost of debt is so inexpensive on this project. We're also working on strengthening our equity in the market as well, which we'll talk about in a second. Now, on this slide, I also want to point out there is one publicly traded salt producing company in North America. It's called Compass Minerals, and this is just another proxy you can look up. CMP trades in the United States. They own in Canada the largest underground salt mine in the world called Goderich in Goderich, Ontario. And if you look at their cash flows, their EBITDA and cash flows, if we would be projected to be greater than the entirety of Compass Minerals if and when we are put into operations. And for reference, Compass Minerals' enterprise value, debt plus market cap, is over $2.5 billion Canadian right now, and our market cap is $70 million. So there's another proxy in addition to the precedent transaction I mentioned earlier for you to consider. What I will also point out is that we are not viewing ourselves as a competitor or direct competitor with Compass Minerals. We would operate in two semi-separate geographical jurisdictions or geographical areas, Compass Minerals in the Midwest, Great Lakes area, and us on the east coast of the United States and Canada. So we would see ourselves as complementary to them rather than competitive in the market. This is a good slide that shows the strength of our feasibility study compared to the original feasibility study, but it also highlights the key advantage of our project, which is our very large margin compared to selling price. We operate in a 50 to 70% margin range, all costs included for the price at the mine gate. Now, a lot of our competitors are operating at a 10 to 30% margin. Again, they're higher cost, they're older, they're deeper underground. These all create challenges in the future for them to persist. This demonstrates what we did with the updated feasibility study, where we accelerated cash flows production, and then this shows the acceleration of the cash flows and shows that steady state of cash flow production life of mine. This is like investing into a bond, right? You pay that initial investment and then ka-ching, 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 you get that dividend payment year after year afterwards. This is a very good slide here that I want to show. It's a very tight footprint of our mine, which is something that most people are a little bit surprised to see for such a large operation producing so much cash flow. This is a very small footprint. What you'll also notice is there is no large waste rock piles. There's no heap leach pad. There's no open pit. There's no tailing storage. There's no water retention. There's no cyanide usage. There's no sulfuric acid usage. There's no diesel consumption. There's no drilling and blasting. Remember, 100% battery electric operated. All of our mining is done underground. Crushing and screening is done underground. It's put onto a conveyor, taken to our transfer building, taken onto another conveyor that takes it down to our port. This is the entire site here in this footprint that you can visualize. We have a study that we commissioned ourselves that shows the economic benefits to Newfoundland and Canada. A lot of tax revenues generated, over 200 full-time long-term jobs created when you include the port, which will expand to handle our supply, our needs. And we have low impact environmental issues for this project. Again, some of the items that I mentioned. And what I also want to point out is you can see visually how low our greenhouse gas emissions are. These do not include the offsetting greenhouse gas from less shipping of foreign salt, which of course has a huge environmental impact as well. And this is something that is becoming more common and more worked into pricing models as the market starts to evolve to account for greenhouse gas emissions, not only in North America, but in other jurisdictions like Europe as well, where this will help our salt be very competitive compared to foreign production. We do have a number of strategic agreements secured, including an offtake agreement, MOU stage right now with a company called Scottwood Industries. They're the largest distributor of packaged retail de-icing salt in the U.S. This MOU was signed last year, and we're working to firm up and expand the quantities and supply that will go towards Scottwood Industries. They have contracts with Walmart and Home Depot, and they're also looking to expand into other areas of the salt market as well. Sandvik, a very well-known name in the mining industry, mine equipment supply industry. They have come to the table as our financing partner and have committed to $70 to $80 million of financing for their equipment. So if you think about it, that's about 15 to 20% of our financing needs locked up already. We're currently in the process of selecting a lead project engineering firm, which by the time you watch this video may have already been selected. Very well-known and reputable firm as well, with a lot of experience in the mine industry. So for an investor, now we get to the exciting part on the corporate development side. This company has a very interesting story. I joined the company in June of 2025, so relatively recently, depending on when you watch this video. But earlier in the company's history, it had very strong market success. It followed the Lassonde curve. It started in 2019 at about 5 cents Canadian, and then during COVID, the initial excitement of the project took that valuation to over $4 per share. So this company was doing very, very well. In the interim period, the company did not market the story well enough, did not work to make sure that the successes of the company were being broadcast to the industry, did not defend the share price enough, and the share price suffered, even though a tremendous amount of work was done by the previous management team to push the project forward in the fundamentals, such as the engineering and the environmental components and permitting side. It just wasn't connecting to the market. Now, since I joined in June, that experience has changed. I brought my experience. I should have mentioned it earlier. I'm an engineer with over a decade of experience in mine development and design. I was involved in 3 major mining projects in the construction phase. Also have an MBA and a CFA, and transferred my skills into corporate finance, budgets, planning, executive management. I was the CEO of a junior copper developer before Atlas Salt. I was attracted by the very strong fundamentals of the project and my ability to continue to advance the project, but also, I believe, to connect to the market to help them understand the value that we are sitting on. And if we follow the Lassonde curve, as we start to secure financing, we start to obtain additional strategic partners, we work through additional offtakes, and more importantly, we start construction, this will start to unlock the value and we will start to get to the valuations that this project should support. The management team, we also brought on at the same time as me a new CFO, Jeffrey Kilborn, very strong experience in the investment banking side, raising money, capital markets. And we have 2 engineers on the project that have been with the story for over 2 years now, working on the feasibility studies, working on the engineering designs and the permitting process. This is in contrast to many companies at our stage of development that are or earlier that are not as serious about developing their asset. We are very serious about presenting this as a project that can be built, de-risking it and making it attractive to investors and potential partners who want to see a mine like this built. On our board, we have a very experienced board, well-rounded. We have a lot of Newfoundland content, of course. We have lawyers, we have board members, executive management. Our chairman and founder is a lawyer as well as a geologist, interesting background. He discovered this project and demonstrated its viability. So this is a first ownership. We have Roland Howe, who is a director. He was the former general manager of that Goderich mine that I mentioned earlier, the largest underground salt mine in the world. So he brings a wealth of experience in projects and operations. And we have Bob Kelly, who is a former VP at Tech Resources with a significant experience in operations, safety, and mine development. So we are well-rounded and we have serious heavyweights here on how to build a salt mine and how to operate it as a mining concern. The last slide here I will point out is some interesting things about the capital structure. We have about 108 million shares outstanding. For a company this far into its development timeline, that's a very attractive number, I would think. Our net cash position with our Q2 numbers plus a raise we just completed was 11.4 million. We just completed a raise by the time I'm filming this video, which raised $9 million Canadian. That is going to allow us to start early works activities, which will start to build the momentum for this project. Some of that will be shovels in the ground as well. So we're very happy to be able to start that and to start to act on it when many mining projects never get to this phase of development. I will also point out for investors, there are no warrants overhanging our company. This includes the financing that we just completed. It was a no warrant deal and we have a clean balance sheet. So I will leave it there for now. Feel free to reach out to the company at any time, including myself, for questions. I love to talk to new and existing investors, and good luck to everybody. Thank you very much.